Hello and welcome to Fintech Focus TV. I'm Toby Babb and delighted to be joined today by Peter Randall of Settle. Peter, nice to see you.
Thank you very much.
So congratulations first and foremost, being on the list of the 100 most influential fintechs of 2018.
Very, very nice, thank you.
And some amazing stuff that you guys are doing.
Yes.
Before we move a little bit into that, can you tell us a little bit about yourself and your background?
Me, yes. Well, I suppose the most important thing is to say is that I've had a long and very interesting career in the city. I think certainly in the last 20 odd years it's been very much involved in central market infrastructure.
Yeah.
It's been involved in understanding that over the history of fintech, I suppose the last, since the 1970s, about every decade something big comes along.
Yeah.
So in the 70s it was Swift.
Yeah.
That was revolutionary once.
Yeah, yeah.
Swift was revolutionary. In the 80s that was the time of the dematerialization of stocks and bonds. That was the big tech project in the 1980s. 1990s was the sort of the era of big central market infrastructure. So CLS, Euroclear Bank, Euroclear Services, that was really in the 1990s.
Yeah.
A little bit before, a little bit after, but that was the sort of decade. The first decade of the 21st century, I was privileged enough to be involved in with Chi-X, which was the application of 21st century technology to the front office space.
Yeah.
And
that's
that
where it really got exciting,
exactly,
wasn't it? Yeah.
Exactly. And what that was really all about was the realization from a technological point of view that you could replace the COBOL running mainframes in the majority of stock exchanges with super fast, super cheap technology.
Yeah.
And you could pass those savings on to customers, and by so doing, you caused a real revolution in the front office space.
And it flew for you and
Chi-X. And it flew for me and Chi-X, yes, that was very, very gratifying. But I think think about it like this. There was a company founded in May 2000 that, by a relentless focus on technology and customer service, less than 150 months later, ICE took over the New York Stock Exchange.
Yeah.
So change can come very, very rapidly.
Yeah.
Out of a clear blue sky,
Yeah.
all of a sudden, something has happened which has changed the way in which the ecostructure operates.
Well, I think it's those two things together, isn't it? Very often, when you talk about technology and customer service, when companies get those two bits right.
Right, exactly.
It moves very quickly.
So my view is that since probably the 1970s, arguably maybe a little bit later, very, very little focus has ever been put on the post-trade space.
Yeah.
And now, with distributed ledger technology, it now allows the same process efficiencies that have been delivered to the front office to be delivered to the post-trade space. And that's really, really important. Because the place where all the COBOL computers running on mainframes have gone to hide is in post-trade.
Yeah.
Expensive, slow, not very innovative, can only be maintained by people who can still remember how to code COBOL. Yeah. That's a dying breed. So that is the great market opportunity that we at Settle feel.
And that's where you arrive now.
Exactly. Exactly.
And tell us a little bit about what Settle are doing. Because it is massively exciting, right?
I think it is, yes. I'm very excited to be part of it. I mean, I think the most important thing about Settle is that before we cut a single line of code, we did a lot of thinking. So we asked ourselves questions about what would the shape of the market be? What would the shape of the service be required? What would the shape of the interactions that would be required in order for it to be successful? Okay? And that very quickly threw up a whole bunch of things. So the first thing it threw up was the idea that this had to be a very fast service. So if you looked at the traditional open source or if you will Ethereum-based blockchain, the very low transactions per second rate. That just doesn't cut it even in post-trade.
Yeah.
You know, you've got to have tens of thousands of transactions a second.
Yeah.
You know, a bank booking bargains that come through from its trading operations, it's not going to be doing it at 19 transactions a second. I mean, they're going to get a backlog so quickly, it's not true.
Yeah.
Regulators not happy with that. So you've got to be able to do tens of thousands of transactions. That's point one. So you've got to design something that can do tens of thousands.
Yeah.
Point two, unless you're just going to do point-to-point, which doesn't change anything, there's no process efficiency, you've got to address an individual ledger on one side of the balance sheet against an individual ledger on the other side of the balance sheet. You've got to be able to make those two addressable.
Yeah.
Well, most of the existing stuff is just point-to-point. Settle can deliver to 100 million separate ledger addresses.
It's incredible, isn't it?
Yes, exactly. So that then frees you up to be able to do all sorts of other interesting things.
Yeah.
Now, the third point that came across from doing the thinking was that this all had to be a permission system if it was to be operating in financial services.
Yeah.
You know, and the best example of why it needs to be a permission system is because it needs to be subject to a user agreement, a legal agreement between the parties, whether those parties are Bank A against Bank B, or branch of Bank A against branch of Bank A.
Yeah.
Yeah. So whether it's, you know, it could be cross-border, but you know, between different legal jurisdictions, that from the point of view of a user agreement has to be properly drafted.
Yeah.
Now, the reason that that's important should be lost on nobody, but to my opinion, in my opinion, it's important for the very simple reason that you imagine trying to sort out the LCH stroke Lehman bankruptcy if code was law and all this was written into the blockchain.
Yeah, yeah.
We'd be now living in caves, the dark ages, and would anybody be interested in sorting out what had gone wrong? No, of course they wouldn't. It took about 3 weeks to get everybody whole because there was a legal agreement that specified who did what to whom, when and how.
Yeah.
Compliance officers had rehearsed it, regulators knew what to do, central banks were behind it. We were able to resolve a systemic crisis really quickly and easily.
Yeah.
So it's my view that in financial service terms, you need to be able to do the same thing. Therefore, you need to be permissioned. Therefore, you need to effectively have that sort of user agreement. So that's the third point. The fourth point, again, which I think is it's probably anathema to some people, but you know, I strongly believe it. You know, if you look at a lot of central market infrastructure, you know, take for example NASDAQ. You know, NASDAQ is not open source. NASDAQ is not open source. Why not? Well, apart from anything else, they want to sell it.
Yeah.
You know, quite helpful. You want to sell it. You know, that's important. But for critical market infrastructure, making it open source, to my way of thinking, just says to hackers and bad guys, well, you know, put a couple of lines of code in this, and then, you know, 5 years, 7 years, whatever it is down the road, you want to activate it, guess what? You've got the back door, you're in.
Yeah.
No, I don't want that. I want to code to ISO 27001, which is the secure coding thing, which allows us to make sure that we know what the code looks like, why it's designed in that way, and it's only designed to do the job it's designed to do. It's not got another function that can be repurposed to do something else. So it's very, very important.
Yeah.
So those 4 things: speed, capacity, making sure it's subject to a legal agreement. You know, you join a stock exchange, open a bank account, open an asset management account. They're all subject to a user agreement.
Yeah.
It seems to me that, you know, it's self-evident that central market infrastructure should be the same way.
100%.
And you know, the final point is that whole thing about cybersecurity.
Yeah.
And we're very, very, very keen on all of that. That's that sort of stuff that we spend a lot of time thinking about. So that's the opportunity. We went and coded our own stuff. We built our own distributed ledger, which can do those things.
And spent the time beforehand setting all this sort of stuff up.
We thought about it.
Yeah.
You know, there's a big premium, I think, in people that sit there and think about it before they cut the code. Whereas a lot of people just rush to cut code and then sort of try and find something to sell it to.
Yeah.
We knew exactly, because you know obviously our board of directors.
Well, the background of the board's exceptional.
The background of the board is exceptional, yes.
Yeah.
Sir David Walker is the chairman,
Yeah.
Rachel Lomax and Ed Richards and of course Martin Clements,
Yeah.
joined recently by our largest external investor,
Yeah.
Stuart Irving from Computershare,
Yeah.
which, you know, again, very, very big grown-up company,
Yeah.
which I think is a very powerful testament to the sort of work we've done. We see the future really very clearly. There's a very great degree of clarity about the future, and it's, Toby, if I may, I'll sort of put it in terms of it's a triangle.
Yeah.
Okay, and the triangle. The first point is that I believe in the future there will still continue to be issuers of paper.
Yeah.
Governments, I don't think government's going to stop borrowing anytime soon, so I think there'll be issuers there. Companies are going to, continue to issue shares.
Yeah.
Companies are going to issue commercial paper, those sorts of things.
Yeah.
Now,
Yeah, it's not going away.
it's not going away. So, issuers, I think, will be surrounded by and serviced by the people that go the final mile with issuers are the registrars.
Mm.
They've got a great future, it seems to me.
Mm.
On the other side, if somebody has issued something, it's because they think that somebody's going to own it.
Yeah.
So there are owners of assets, and the owners of assets, of course, ultimately are all of us,
Yeah.
but that's modulated by kind of like the asset management industry.
Yeah.
So you've got the big asset managers, you've got the passive funds, you've got the active funds, you've got all those sorts of, that's a community.
Yeah.
And they're serviced in part by their people like the custodians and all the rest of it who provide services to the people that manage the assets. So the final mile is provided by those sorts of people. Issuer wants the highest possible price. Owner wants the lowest possible price. So you've got to find some way of doing pricing.
Yeah.
Well, fortunately, because of something that went on in the first decade of the 21st century, you've got highly efficient trading platforms these days.
Yeah.
So, CBOE, you've got LSEG, you've got NASDAQ, you've got all these, trading platforms that are actually really very, very efficient, in terms of their technology and all the rest of it. So they do the pricing. Yeah. And they will be surrounded by their eco-structure or community, which naturally are the broker-dealers. So the point is that I think there's a great future for broker-dealers and platforms, for asset managers and custodians, for registrars and issuers.
Yeah.
But people in the middle, the people that, if you will, today provide services to the people that provide services, I see being disintermediated. And I see that disintermediation happening at record speeds. And the adoption of Chi-X was a good example.
Yeah.
It went very fast, but I think the distributed ledger advantages are going to be seen by people looking at cost-income ratios that are completely unsustainable from the perspective
and it's
of
interesting you
financial
talk
services.
about, sorry to cut across, but it's very interesting you talk about that sort of speed of change within it and adoption, because I think probably we've been talking about distributed ledgers now for a good couple of years on a mainstream basis, and I think that conversation has been from it taking a decade to it taking 5 years to it becoming more and more, and everything we're talking about at the moment, the vast majority of the list of the 100 companies is involved in some way, shape or form, or certainly pushing resources towards that, and that adoption seems to be coming ever closer.
Yes. Well, I mean, we've got now one of our investors very kindly wrote to me the other day saying, you've got the first working example of a distributed ledger anywhere in financial services, which I think was a big tick. And that, of course, is ISNES, which is our project in France. Yeah. We've got currently, I believe, 22 asset managers across France, and we're adding asset managers across the rest of Europe at a really, really encouraging lick. Yeah. I believe the asset managers that we've already got could, I'm not saying they will, but they've got the capacity to put over €1 trillion of assets straight onto the ISNES chain.
It's incredible, isn't it?
It's extraordinary.
Yeah.
So, €1
trillion.
trillion.
I think they've been crying out for this in the asset management world.
Yeah,
as well.
exactly.
Yeah.
Exactly.
Yeah.
So €1 trillion. Just think about that for a moment, Toby. If you add up the total market capitalization of the cryptocurrencies, you might get to 400-500 billion. Yeah. Yeah. That's the whole ecostructure. This is one product, i.e. asset management mutual funds in effectively, at the moment, largely dominated by France, but you know, Germany and other European jurisdictions shortly to follow. Luxembourg as well, of course, shortly to follow. That's just one small part of the total picture. So the scaling issue for the business opportunity is so great that you know, the cryptocurrencies, as interesting as they may be to the hobbyists, you know, really aren't. I don't believe it's going to touch the sides, and I don't believe that they can offer any workable solution within mainstream financial services.
So when you look at what you guys have done, you tick so many of the boxes of what makes, in my view, companies successful and companies grow quickly.
Thank you.
It is, you know, when we've looked at it, we've spoken to a number of the companies now on that list and explored, you know, some of the biggest and brightest over the last you know, decade, effectively. To me, it comes down to the quality of the team. It comes down to the thought and effort that goes into it. It comes down to answering questions that really are needing to be answered. So much of FinTech looks at questions that are nice to haves rather than essentials and genuine benefit to it. It looks at customer service, it looks at speed, and it looks at cost. And I think if you look at, if you bundle everything we've been talking about,
I think we've covered most of it. I mean, I think from my point of view, I'm going to be somewhat more. I don't think controversial, but I'll be a little bit controversial maybe. The real answer to how quickly this will be adopted is the price advantage or the cost advantage that it offers. So you go back to Chi-X, probably too cheap. But you know, I made a big feature of the fact that it was 90% cheaper than the LSE. But you could buy 1,000 shares on Chi-X for, let's say, 10 pence, where you'd pay the LSE a pound. Well, it's 1,000 shares of Vodafone, right? It's not. You didn't get a better sort of contract note from Clara First, signed with a big felt tip, you know, big quill pen, and wrapped up in vellum and delivered by a horse. It was probably you did, but you were paying like for like, and you were paying a tenth of the price. That was a real driver to speed, if you will, adoption. The fact of the matter is that the post-trade space is very, very expensive for banks and institutions, very, very complicated. And how often do you read about, you know, Bank A or Bank B or Bank C discovering a system that they never even really knew about, that operates in some, you know, far-flung territory or jurisdiction, that all of a sudden has on it a list of 5,000 people who shouldn't be clients of the bank, right? And then some regulator turning up and saying, "You're a very naughty boy, we're going to fine you, you know, a very large amount of money." That happens all the time in mainstream because of the complexity of the systems that they've developed. And that comes from the silo effect of having, you know, bonds and then derivatives and then equities and then real estate. Yes, exactly. So nobody's got they claim they've all got views over everything, but of course they don't. But once you've got things in a standard, simple ledger structure, then it's perfectly easy to see those connections. And if that ledger structure, instead of being delivered on, you know, very expensive hardware, is delivered, you know, on much cheaper hardware, but hardware hosted in the cloud, and being able to take advantages of what technology really has to offer, then I think you're into a good space. The example I give most interestingly, I think, is that the trick for financial services, in my opinion, the trick for financial services is to try to make its customers into its unpaid employees. It's to try and turn its customers into its unpaid employees. So, for example, you know, if you go to somebody like IKEA, you walk around IKEA, you take the thing down off the shelf, you've become a warehouse person. You take it to the checkout, you've become a checkout person. You put it in the back of your car, you've become a common carrier. You take it to wherever it is in the house you want to put it up, and then you become a fitter. You work for them 4 times. They don't pay you to do that. Financial services, they make a big deal of saying, oh, we're all internet enabled and all the rest of it. Really, all you're doing is sending them a message. They look at it and say, yep, okay, that's fine. We'll. Do you see the point? You see the distinction that actually turning your customers into your unpaid employees is the way to cut your costs.
Yeah.
And that becomes very easy using a distributed ledger.
And that cost reduction has been very much the sort of trademark of your
exactly,
career. Right?
My career.
And indeed, the sort of, I guess, the most successful companies in the space that we've seen, particularly around fintech space, has been all around that.
Yes.
Simplification and cost reduction.
Exactly.
And that's the beauty, I think, of what you guys are doing.
Exactly.
So with all of that, and with this product that is hugely exciting for everyone involved in it, what's next?
Well, the future, I think, is really very straightforward, as far as at least I see it. Which, let me give you an example with using ISNES. So there's one chain that connects all these 22, however many it is, banks and financial institutions, asset managers together. It's a mutually owned, mutually controlled chain. Very, very quickly, each one of those financial institutions will want its own chain to control its own interactions with the other chain.
Yeah.
Then it will want multiple chains to control other interactions with its own chain that controls interactions with the chain. So the ability to scale this grows exponentially by the number of, effectively, what we internally describe as beachheads.
Yeah.
So the more beachheads you build, the quicker the adoption by the participants of those beachhead projects becomes. So that, I think, is the thing that will, in my opinion, accelerate this company from where we are today.
Yeah. It's still relatively fresh, right?
Oh, exactly. Yeah.
It's 2015.
Well, we kind of started the thinking in 2015. Yeah. We funded in 2016.
Yeah.
And we've been sort of beavering away ever since then, really. So, we started off as we could have a complete team meeting in the back of a London taxi. That was quite easy to do. And we've now got 90 people in 4 separate centres. So,
it's incredible growth.
That's a good growth.
Yeah,
That's good growth.
Yeah.
That's good growth. And we're looking forward to putting a lot more scores on the doors, as it were, as we go forward.
Well, Peter, it's lovely talking to you. I could continue for hours, and I'm excited about it. I look forward to watching it continue to go through over the coming weeks, months, and years. And thanks for sharing so much.
Thank you, Toby, and thank you for Harrington support.
Oh, not at all.
Harrington Starr support.
It's been a pleasure. Thank you all for watching, and you can get in touch with Peter. How best to get in touch with you?
Well, there's a website with contact details on.
Wonderful.
That's the best way.
I'm sure they'll be queuing.
Look forward to hearing from you.
Thanks to all.
Please mention Harrington Starr when replying.
And we'll look forward to seeing you all very soon on another episode of FinTech Focus TV. Thanks for watching.
Thank you.
Thank you.
Thanks very much.